Morning traders, it's Chris from the daxtrader.co.uk and it's the 21st of May, it's Tuesday, and let's do a review of yesterday and have a look and see what we can expect perhaps for today's session. Alright, so I'm on the website at the moment. You've got yesterday's article over here on the left that you can see. Go and check that out, and I'm just going to go straight to the dashboard, so I'm just going to scroll down and take a quick look at some of these numbers over here. And I want to see specifically what's happening today on the European calendar, or the economic calendar. And we've got a number of things that have already happened over the Asian session, particularly over in Australia. And today we've got an ECB speech that's going to be happening anytime now over the next few minutes. So expect a little bit of volatility perhaps. At 11 o'clock we've got the inflation report hearings in the UK and a couple of US items coming out in the afternoon, so be sure to check that out as well. Alright, now you mentioned, or you may remember yesterday in the article, or in the video should I say, that I was talking about a specific situation on the hourly chart. I'm just going to go and see if I can turn that back over here, because I need to switch on my charting platform in here. Hopefully that will work, and let's turn that one off. There we go. I was talking about something specifically on the hourly chart over here that said that if price was to go ahead and break through this upsloping line, then perhaps we could see an extension of the move that we saw beforehand, so somewhere down towards the 12,000 level. Well, we did get that break, and it did actually move all the way down to where it would have expected to, and we've now got ourselves into a situation where we've tagged this previous confirmed higher low back here. We didn't really break below it, but we did tag it, so that kind of gives us a bit of a neutral stance, and yeah, makes it a little bit tricky to kind of decide on what sort of bias that we're on. But right now remaining neutral is perhaps my preference, so I can remain open to buying or selling, not just particularly in one direction or another. So let's see how we react to this, whether or not we break through that 11.9. If we do that, then it's clearly bearish. If we fail to break above this 240 level, or back up to test or target these highs, then it's more likely that it's going to break to the downside. But we will see. Okay, let's take a look at the levels. We've got, first of all, yesterday's price action was this. So you can see that we were trading around the value area high, this line, this dotted line towards the top here, pretty much for the majority of the morning session and the overnight session. And then mid to late morning we had this collapse through the point of control, through the pivot, through the value area low, and eventually through what would be this Camarilla breakout level down to the low that you can see back here. I think that's the Thursday low, and we found some support down there. So interesting, we had a mini gap higher this morning, and that was above the, if you like, the bulk of yesterday's trading volume that happened in the afternoon session around here. So we gapped above that, and we managed to hold above that for the majority of the morning session so far, with this rejection candle here suggesting that the auction is rejecting lower prices. So that's an interesting observation. So if we continue to trend higher intraday, it's likely that we're going to get up towards this value area that you see over the right hand side on the composite 5-day profile over there. Alright, so that will be that. Let's go and have a look and see on the exposed points of controls. What have we got? Well, the situation hasn't really changed very much from what I talked about yesterday in the video. We still got 12,412 up there and 11,755 down here. Not a great deal in the middle, apart from yesterday's point of control. You can see that we've got this B-shaped profile, which is heavy. So we got this P profile, an O over here, and a B. So it's an unusual sort of setup. But at the moment, you could be forgiven for thinking that price is going to carve itself a range somewhere in between that value area and these value areas. So somewhere in that zone could, easily be today's trading range. But predictions are not really a profitable business. Here we can anticipate, but predicting is probably a fool's errand. All right, let's go and have a look at the strategies themselves. So for yesterday, Let's have a look and see how the strategy would have been utilized. Let me just give the trading disclaimer here that trading financial markets is risky. The disclaimer is in the description below. It applies to all of the material that I publish from this site. Now, I've not been very active on the DAX over the last few days, perhaps even week or so, because I've been involved in other markets, mainly cryptos, and I've been doing very well with those. So DAX hasn't really been providing me the returns that has. So I've shifted my attention slightly, temporarily. So whilst I might not have taken all of these opportunities, you as subscribers, of course, have got access to this software. So there's no reason why you can't take advantage of this. So let's talk you through how it would have worked. And so yesterday we've got the red overlay, so that's bearish bias for me. Not really looking to buy into a bearish bias. So that bullish signal here, where it turned from neutral to green, would be a buy signal. I ignored that, or would have ignored that normally. And then as it turns out of bullish into neutral, which is the red and white candles, they're neutral. As it turns back to neutral and then eventually to blue, which is bearish, that's the situation there that you'd be looking to sell. So you've got a red overlay, it turns from neutral to bearish. That's the situation to get into the trade. And what you're looking for is where the dot is, and you can see the dot's hidden behind the arrow somewhere in there. But that's where your stop loss would be. You'd enter on the open of the next candle, which would be this one here, and you'd look for 4 to 1. So it would be something like that. Okay, so stop loss would be up here, and you get into the trade. As soon as the trade gets into profit by 1R, in this case that would be 18 points, because that's how big your stop loss is. You're risking 1% of your account for a stop loss. So if you get into profit by 1%, you move the stop loss to break even. And in this particular case, it ran all the way down, or would have ran all the way down to take your profit target. So a nice looking trade there. And if you were greedy or wanted to continue trading, there was another opportunity here. You would have been out of a trade. There was another situation here where we were in neutral mode. Well, mode is the wrong terminology. We were in a bearish overlay, but the price action was neutral. And then it turns to bearish. So that would be the situation where you get into a trade. You look for the dot, which is there. You get in on the open of the next candle, which would have been at the bottom of this one. So you're risking 19 points there, and you're looking for 4 to 1. It's the same situation as before. So you put yourself down to that. So 1R is 19 points. That's how much you're risking. So if it goes into profit by 1R, you move your stop loss to break even. And there's two ways you'll get out of this trade. You're either going to get, let me clarify that, two ways you're going to get out of this trade for a loss. It's either going to hit the stop loss, which is up there, which it didn't, or it's going to close above the dots, which it didn't. So you would still remain in that trade. You would have been sat on some drawdown, and maybe at this stage you'd be thinking, nah, this one's going to go. One of those things. Stop losses are the cost of business in trading. But it didn't. It would have continued on, and then you would have caught yourself a second rip, and down to the profit target it goes, and that would have been your second one of the day. I normally would walk away after one, but in this case it would have given out 2, which is a very nice day, because that would have been 4% on this one, 4% on that one. That's an 8% day. I'm happy with 8% a month, so that would have been an excellent opportunity. It's a missed opportunity for me because I didn't take them, but hey, the market is going to give you opportunities every day. It doesn't matter whether every now and then you miss one. As long as you're taking opportunities on other markets, and as long as your bottom line is going up, it doesn't really matter which ones you do and which ones you don't take. My idea is to try and share this strategy with members so you can actually take advantage of it yourself, rather than relying on me to send the notification into a channel. So hopefully this will be easy enough for you to follow. So if you are already a member, then and you have Sierra charts like this, then just let me know, and I'll get you access to this software and show you how to use it. In the afternoon session, there were a couple of other options as well. So again, still bearish mode. It was white over here because that's lunchtime. I don't normally trade over the lunchtime period. So as it comes back from 1 o'clock, it's still bearish. You've got an opportunity to sell here. Your stop loss would have been somewhere in that arrow. I can't quite see where it is because the arrow is covering it, but it's in there. So I'll assume it's the same as before or very similar. Open of the next candle was the entry, so you're risking about 12 or 13 points. So you're looking for 4 to 1, and so that would have been down here. You might look already to the right and think, yeah, it would have hit, But the reality of the situation is that you would have got out of this trade before it would have got there. And let me explain to you why. So as price continued to move, you would have got yourself into profit by at least 1R, 13 points of profit. So you would have moved your stop loss to break even. Did it take out your break even? No, it didn't. But the other way that you get out of the trade is when the candle closes above the dots. And that's the situation that happened here. So as soon as that candle closed, you would have got out of the trade. So small profit, but one of those things. Could you have just left it and set it and forget it, which meant that you would not have moved your stop loss to break even or not have closed the trade when this candle moved? Sure, that is a way you can play the strategy if you want to, and if you would have done that, then you would have had another winner there. But, one of those things. If you would have played the strategy the way I do, I would have got out of that trade here, and then perhaps consider getting in again here. And this example, just to price it all up, would have been there. As a stop loss, you would have got in on the start of this candle, looking for 4 to 1, which is way down there. You're risking 21 points, so you'd need 84 points to gain 4 times. And just looking across, I don't think this would have gained 20 points of profit until over here, and it would have closed out in there. See that candle there, closed above the dots. That would have been the point to get out of the trade. So again, just a small little winner, but hey, don't look a gift horse in the mouth. And then the final one was this one here, and you get the idea now. So your stop loss would go above here. You'd enter on the start of the next candle. You're looking for 4 to 1, which again is way down there. So it's about 86 points profit. And in this particular example, that movement down would have been probably about 22 or 23 points, I assume. More like 30 points. So it would have given you the opportunity to move your stop loss to break even, which would have been taken out on this bullish candle here. Otherwise, it would have just wiped your stop loss out, which also happens. One of those things. So it was a pretty good day for that yesterday. And as for today, it's choppy. It's not a particularly nice looking market out there today. It's pretty horrible actually, and it worries me whenever I see this flip. So you can see it's gone from bearish, one candle bullish, back to bearish. That worries me because it makes me think that we're just pretty much chopping. We're not going anywhere. But there was a sell signal, and it was valid. It was in a bearish overlay. Stop loss would have been in that arrow somewhere, and you would have looked for 4 to 1. It would have been the open of that candle. 4 to 1 would have been down here. You would have got yourself probably just about into profit by 1%, which is enough to move to break even. And so either you'd have got taken out on this candle at break even. That would have been it. You would have been taken out with this candle at break even. Or even if you got out when that candle closed, it was the same point anyway. So no different. And there was another buy opportunity over here. Okay, so I've been talking at a bit of speed to run through that, but that is the main strategy which I use for trading the DAX. I have others as well, but that was one of them. Another one yesterday is the IB breakout strategy, really nice and straightforward. And in this particular case, you're looking for the overlay at the beginning of the IB session, and in this case it was red, which means looking for sells. As soon as you break below the IB, you look for a short. Look for 3 to 1 on a break, and in this case there was a failure here, another failure over here, but then that one would have been the third attempt. Doesn't give an arrow because the overlay is green, but you can override that pretty easily, and then straight down, pretty straightforward. And as for today, the overlay is green, so you're looking for longs. There was a couple of opportunities here that actually failed. In fact, actually, I think the third one has failed this morning as well. So that would be it. No more chances on that. That was the first one, stop loss. That was the second one, stop loss. That would have been the third one, and it would have held all the way over here, potentially a stop loss. Maybe you'd have moved to break even on this one. Yeah, it gives you the idea of how to use this strategy. Anyway, guys, that's enough rambling on from me. I've gone on for quite a while this morning, so I'm going to leave it there. I'll see you all again tomorrow. Have a good trading day. Until then, take care.